All right, so Infosys is in focus after reporting a good second quarter. Reema is here to tell us what the feedback is post that 5% up move that the stock has seen. Reema.
Thanks so much for that. Well, it's a good showing considering the fear that was going into these numbers, the fact that we will already start seeing some signs of slowdown, at least as of now. The Q2 numbers were very strong, and even the FY23 guidance reaffirms that things for now appear to be stable. No one knows what FY24 is going to be. There is no visibility on that, but at least for the next 3 quarters, the outlook seems to be intact. And given the fact that the stocks had gone into these earnings with, with a position more on the short side, the valuations are derated. We are seeing that pop in the stocks. So Infosys, there was a big Q2 margin beat. The deal wins were very strong, going up 50% on a quarter-on-quarter basis. The buyback also adding to the support. On the top line, there was a bit of a miss, but more than compensated on the margins in Q2, expanding by 100 basis points. FY23 guidance on the top line has been tightened. They've raised the lower end of the guidance. So now revenues for Infosys will be within the band of 15 to 16%. And margin guidance, in a way, has been tightened towards the downside. So margins for Infi will be in the range of 21 to 23%. Largely, the management commentary was also fairly encouraging. They do talk about some macroeconomic issues, but all companies are caveating that things are volatile. So therefore, there is a bit of a wait and watch. The buyback is adding to the support. It's a 9,300 crore open market buyback at a maximum price of 1850, which is fairly healthy. Brokerages continue to maintain the faith on Infosys across the board. We've got some buy ratings from brokerages. Back to you.
All right, Reema, thanks a lot for that. But stay on. We have Mindtree as well, which is doing well in today's trading session. An all-round beat there.
Yes, Ambit called it the perfect quarter. And brokerages are reacting to the very strong showing, all-round beat, as you pointed out. Morgan Stanley has raised the target price to 3,400. Nomura has raised it to 3,180. The only reason why for Mindtree, most brokerages have a neutral to equal weight type of rating is on account of its valuations. Valuations for Mindtree are very high and higher than even what large cap peers are trading at. Q2 was a beat on all parameters. In fact, there were very few points to complain. Dollar revenue growth 5.7%, constant currency revenue growth at 7%. This was the 7th consecutive quarter when Mindtree's revenue growth was in excess of 5%. So, it's been a very strong run for Mindtree. Margins too have come in higher than what the street was anticipating. The company was able to absorb the wage hike without denting their margins. That said, the outlook, there are a few sectors that the management has called out where they are seeing some client-specific issues, some slowdown in deal wins. So retail is one sector they've spoken about, but even the high-tech sector, so manufacturing, logistics. So there is a bit of a cloudy outlook, you would say. And finally, one of the big kickers is the fact that its merger with LTI is progressing very well. The company says the regulatory approvals are in its last stages. It should come by December. In fact, when we chatted with the management, they also said that perhaps in Q3, that's in January, we will be reporting the merged entity financials, LTI as well as Mindtree. So this, what I'm talking about, could very well be the last quarter of standalone Mindtree numbers. So, the merger is also progressing very well, which is something the street likes. Back to you.
Okay, all right, Reema. Thanks very much for that. That's on Mindtree.